Hi, everyone. Welcome to Small Cap Discoveries conference call. Today we have back the CEO, Derek Webb from Biorem. Biorem trades on the TSX Venture Exchange under the symbol BRM, and it also trades on the OTC under BIRMF. The company is currently trading at $1.53 with about 16 million shares outstanding, or about a $24 million market cap. I'd now like to hand it over to Paul Andreola.
Thanks a lot, Trevor. Derek, great to have you back. We're excited to see you because we're a lot friendlier to the company as of late because we started coverage about 2-3 weeks ago, and real happy with the response. It seems like everybody likes what you're doing, but obviously it'd be great to catch up, get a better idea how things are going. We have had you on in the past. So for those that want a real deep dive, there's a full presentation from the last time that Derek was here. But for today, we're going to get a bit of an update, and we're going to just go right into Q&A. So Derek, welcome. And why don't you just start off by giving us a sort of a deep understanding of what Biorem's all about?
Perfect. And first off, I'd like to thank everyone for having me back on. Biorem is my passion, so I certainly like to share the story, and there's a lot of really good things happening right now, so great timing to catch up with everyone. For those that don't know, Biorem kind of considers itself an environmental biotechnology company. That's the core root of our existence. So we use naturally occurring bacteria and fungus that essentially use air pollution as a food source. We've been doing this since the early 90s. And it can be used on this technology can be applied on a very wide range of applications, whether it be odors from wastewater plants and solid waste facilities. It can be used on cancerous emissions coming from heavy industry like petrochemicals or pharmaceuticals. So across a wide, diverse range of industries. More specifically, we've been trying to branch out in the last couple of years and saying, well, not every application can be addressed with Mother Nature. So bacteria can't consume every type of components. Quite often projects have commercial needs that might not be met by that technology. So we've been spending a lot of our resources and our bandwidth to look at new products and new technologies that can address a wider range of applications, both from the technical as well as the commercial side. Which kind of brings me right into some of the great things that we've been doing. As I said, historically, the core of our business has been selling these biological reactors that do the work for us. And about 24 months ago, we started looking at trying to bring in some physical technologies. The particular technologies that we were looking at are known as dry scrubbers. So think of them as a sponge. They use an adsorbent that have certain affinities for compounds out of the air, draw them out of the air onto that sponge, and at some point that sponge gets filled and needs to be replaced. What's really interesting about this is that it provides a new type of revenue model for Biorem. So when you're using Mother Nature, there's really no consumables, nothing that needs to be replaced. One of the value propositions that we had with the biological reactors is we had a permanent system that we grew the bacteria on. If you put it in once, you never have to think about it again, and it does its work as long as you operate it well. Sounds great for the end user, bad business model because I have nothing to sell back. So with this physical approach that we're taking, there is a significant consumable component that we're trying to tap into to smooth out those peaks and valleys that are very customary with a capital equipment type of business. Furthermore, there's still another part of the market, and I believe we've talked about this on previous segments, but if you look at the whole addressable air pollution control market in North America, roughly a third is handled by biological, a third can be handled by physical, and the last bucket is chemical. And that's another area that we've been kind of dabbling in the last 6 months to go after projects opportunistically. To kind of give you a bit of a summary at how well that's been going, if I look at these new initiatives that we've been pushing, there's been roughly 25 million in new revenue secured or new bookings that's going to convert into revenue from these initiatives. So what we're seeing from that is very positive market response for these new products that we're introducing to the marketplace. So that's been very exciting from our perspective. We're really looking forward to what 24 will bring as we expand the geographic markets that we go after, and then we also expand the offerings in the chemical side of things. In addition to that, Biorem is also looking at a number of other ancillary technologies that we can bring to market as well. You can imagine when you're dealing with quality of life issues like air pollution or odor, one of the most common other issues you run into when we're speaking about quality of life is noise. You know, no one wants to have their home or their residence right next to a noisy piece of infrastructure. So dealing with that sound attenuation and looking at kind of bringing that technology in-house. So the engineering that goes along with it, as well as the fabrication of that type of equipment. There's a variety of other small technologies that we're currently working on as well that we just feel will be more complementary in terms of our offerings as we kind of migrate from that, you know, being the best in biotechnology to providing a full range of services to meet all of the needs of our customers. And I think that kind of gives you just a little tease in terms of where we're at these days.
Perfect. No, I appreciate that. Derek, you talked about a few different sort of products and services that you've sort of almost recently launched. Give us a sense of what's the addressable market for the type of products that you're selling right now?
If we look at the whole market, we're in North America alone, you're probably looking at a couple $100 million a year. This is still growing at you know, depending which study you look at, from 7 to 9% annually. You know, when you look at the studies, we've looked at multiple studies to try to determine just how large these addressable markets are. And there's quite a bit of variability. And you really need to dig into what those numbers include. So a lot of these numbers not only include the equipment itself, but will include the installed costs. So there might be civil, mechanical, electrical components that kind of go all into that. But it gives you a general feeling of the size of this market and the fact that it continues to grow. And I think that's the important thing. You know, as I've said this to many people, yourselves included, you know, Biorem tends to be a very unique type of clean tech company because of our exposure to critical infrastructure. And that exposure, just the proportion of the work we do in that market segment is so significant. But what's great about that market is you have a lot of visibility, right? You know when a government passes an act. We're aware after multiple economic crises of the amount of money that goes into infrastructure. The budgets are set and the projects take a long time to be delivered. So it just gives you a lot of visibility, and it helps us for forecasting. It helps us for human resource planning, and it gives us visibility. It's, you know, it's one thing to have a great year, but I want to know that we're going to be doing better the year after and the year after and the year after. And understanding that there's, you know, the Bipartisan Infrastructure Act, there's other infrastructure acts that are on the table. You have a lot of investment in Canada and continuing investment in quite a few regions in Canada in infrastructure. So this gives us visibility for multiple years. So it's not only what we see from being on the ground, having our boots on the ground and speaking to customers, speaking to municipalities, speaking to the consulting engineers that work for the municipalities. We get that feedback, which gives us the short to medium term outlook, but also looking at these larger macroeconomic factors give us the medium to long term outlook. And it just gives us a lot of flexibility and a lot of visibility in terms of what we should be doing today to take advantage of what's coming down the pipeline.
Mm-hmm. Now, Derek, you had mentioned the U.S., you mentioned Canada. Geographically, where do you operate? Where do you sell to?
The main focus, North America, predominantly Canada and the U.S. However, opportunistically, pretty well anywhere on the globe. We've got a very diversified supply chain that enables us to be competitive in a lot of areas. We do have partners that we work with in limited areas of Europe, in the Middle East, quite a bit of coverage in the Middle East, and limited areas in South America, as well as Oceania. So we've got pockets of partners kind of spread out across the world, and we work opportunistically to go after the projects we think we can add value. There's certainly a larger addressable market, but that comes with bigger risks and more costs to address those markets the further away you are from home. But certainly things that we're looking at, and we're hoping that there'll be some exciting news this year as well from that regard overseas.
And like what, I mean, large and growing market, but what makes you better? Like why are you guys winning these bids, or why are you winning customers like you are right now?
I think it's a combination of factors. I'd like to say superior salesmanship and features. And I think that is part of the element. At the end of the day, regardless of the technology, regardless of how convenient using video conferencing is and access to people via mobile, people buy from people. And in this extremely crowded time that we're living in, and when I say crowded, just all the impositions on our personal time, having instant access to a reliable partner that can get you the answer you need in real time and be responsive and give you the answer that's actually accurate, and having a company that stands behind that, I think is of value to our customers. I think that's one of the elements. So we're a reliable partner. The infrastructure, the internal infrastructure that our company has built, I think is also one of our assets. We've talked about this on previous episodes as well, but I think the way we're structured enables us to handle a very large volume of custom work with a small group of people. And this group that we have can still handle a larger capacity. So having that gives us a lot of flexibility on projects. You can imagine if internal processes of another company are not as efficient, their turnaround time will be longer, the errors will be higher, and they won't have the capacity to meet the time schedules that many of our customers demand. So I've seen that play a factor in quite a number of jobs where we've been the only company that can deliver within the required time frame. And that's been a large factor for why we've received that order. And then I think finally, with taking the reputation and the credibility out of the equation, because of our internal structures, this capacity and how efficient we are in delivering, and due to our supply chain diversity, we're actually able to deliver at a lower cost when required. So, it's no matter how strong your relationships are, no matter how good your product is, this day and age, it boils down to price in a lot of cases.
Mm-hmm.
And when we need to compete that way, we're able to compete that way. And, so it's not a single answer, but I think you start putting all of that together and it gives us a competitive edge.
No, awesome. What's a typical order size for sale for you guys? Where does it range?
Well, this is the other good part of the story. Historically, that would have been probably $250,000 on average. That would be ranging from $50,000 to roughly $1 million. But year over year, that's been increasing as we undertake larger scopes, as we provide more pieces of equipment, and as the infrastructure projects themselves grow. So I think the latest numbers we saw are probably pushing 450 to 475,000. That goes up and down, but the range of our offering now is from $50,000 to last year breaking a record at $9 million. So that was a nice project to bring in.
Wow. And you said that you've got the ability to sort of grow with what you have right now. What kind of capacity? How can we measure the capacity capability that you have right now?
So that's also a challenging question to answer. It really boils down to the product mix, right? If I'm selling a lot of one type of product, I could probably double the size of the company with my current resources. If I double the size of the company with another type of product, I would probably have to double the size of the company to be able to deliver that project. So it depends on the complexity of the project. And And a lot of times the size as well, right? Whether I'm delivering a $250,000 job, it's usually the same amount of effort to deliver a $2 million job. So it depends on the product mix, the size of the job, and that's changing all the time.
Mhm.
It's something, once again, this is the beauty of our type of market space, where I have the visibility to understand what my human resources are going to be required in at least a 12, if not a 24-month period. It's beautiful for planning purposes.
Mhm. Why don't we talk a little bit? You mentioned the infrastructure bill in the States, and we're starting to see some other stuff like that in different jurisdictions. What, like, how do we, like, how big is it? Like, I'm trying to guess, like, what's the push? What's the initiative? I know there's so much infrastructure that needs to either be replaced or upgraded. Once we spoke a couple of weeks ago, you mentioned Vancouver for an example, in terms of the size of some of these projects and some of the things that just have to be done. Maybe go into some of those details.
Certainly. That's a great example. So Metro Van is slated to spend about $50 billion in upgrading their wastewater infrastructure. And my understanding is that that money is simply to upgrade the treatment quality and capacity. Still doesn't even deal with necessarily the future forecast and population increase. So certain areas will need to increase the capacity of treatment for solid waste as well as liquid waste, simply based on population growth, which is a good story in Canada, given the high immigration rates, right? So that's going to affect certain areas, mostly the big cities. But you see that in the US in certain areas where people are retiring, you're seeing growth, right? It was the same thing during the fracking boom. You had all of these subdivisions being built in the Dakotas to deal with the oil boom, and that just had a huge boom in terms of the infrastructure that needed to go in. So if we look at the Metro Van area, that's 50 billion right there. In terms of what the air emissions control aspect would be, hard to say, but it could be upwards of 100 million just for that one city. We know that Toronto is looking at some very significant, or the GTA area is looking at some very significant rework of certain catchment areas. It's the same thing in the US. There'll be old aging infrastructure that will also need to be dealt with. So it's not just the dealing with population growth in certain sectors, but it is just upgrading aged infrastructure. So you've got a lot of, and then you've got politics playing, right? Well, hey, we've got some money, we need votes in a certain area, let's pump in and upgrade things in that area. You've got a variety of things, but we're really talking the billions to trillions of dollars if you put in both countries over the long run.
Yeah, amazing. Okay, let's talk more about sort of the recent business. I mean, you guys were on a nice steady trend for a while. Business was good, but you had a bit of a hiccup. It looks like there's been some delays in some projects. Maybe let's talk to sort of what's happened over the course of the last year or so.
Certainly. Since coming out of COVID, there's been a number of implications from that period of time that we're still kind of working our way through. I think one of the things we've noticed is a demographic shift where some people have decided to pull out of the workforce. You have some people that have decided to not fully pull out, but go into semi-retirement. And then combined with that, you've seen a lot of inflationary pressures and supply chain disruptions. And both of these have had repercussions for us, both at the front end, meaning before we get an order, as well as the back end. So to explain that a little bit in greater detail, you can imagine on the front end, these are large multi-million-dollar infrastructure or multi-billion-dollar infrastructure projects. Budgets are set 5 years ago. They finally make it out to public tender. They bid, and lo and behold, they come out twice the price they were when they budgeted it 2 years ago. So in a lot of cases, the project still has to go on, right? This is critical infrastructure. People still have to flush their toilets. They still have to send their waste somewhere. So the majority of these projects still go on, but it has to go back to town council, the budget has to be increased. A lot of times it'll go back to value engineering. Is there a better way of designing and constructing these systems to try to get that price down? So what that's doing is delaying the receipt of the order, right? And in certain cases, I've seen delays up to a year. Good news is the majority of the projects still moving forward. You have to deal with these issues. And then on the backside, it was a ever evolving dynamic of what the delays could be. At first, it was a lot of delays in the supply chain. You know, motors, especially certain instruments, advanced instruments with certain chips. There was long delays. For the most part, Biorem was able to navigate that with some interesting kind of internal strategies to mitigate. And once again, that's why I always refer to a diverse supply chain that we have. But more importantly, what we're seeing is there's just so much work because of this investment in infrastructure, and there's a limited amount of people to do the work. And that's just ending up with a lot of bottlenecks, right? You had a lot of the senior gurus that might have been the experts in their subject matter that have retired. They're being replaced with not as experienced people. So someone still has to make that decision. And what we're seeing is a bottleneck in these decisions being made as a younger generation distributed across the continent funnels all of their approvals through one or two people spread out. There's been delays from that viewpoint. And then there's still issues with logistics in the supply chain and labor shortages that affect the contracting side of things. So we're kind of seeing these three factors all kind of converge. And what it means is we're missing deliveries on one quarter that are getting pushed into another quarter. We even have some large jobs that have still not made it past the approval stage 12 months after the design was made. So most of the delays, I'd say the vast majority of the delays that we experienced last year are outside of our control. The good news is that the contracts, they're not being canceled. They're still moving forward. They're just moving forward at a slower pace. So when I see whenever I see revenues kind of dropping because of projects pushing out from one period to the next, I try not to get too excited about it. I look at other factors, right? Are we losing the projects? Are we still booking to replenish? Are we still booking at an acceptable rate to fill that hopper? And so I look at a lot of metrics other than, okay, yeah, this quarter looks a little soft. As long as I know that we're not losing the projects, that's a good thing. Mm-hmm. And I think if you look at last year in particular, we had a combination of several factors. We had a much higher win rate. So the bookings were growing organically just from all of these new products and initiatives, which was really pumping up the backlog. And then you had projects that we had in hand being delayed, which continued to build up that backlog. And I think at one point in the summer, we probably hit an all-time high of 60 million in the backlog, which is significant. And I think at the end of Q3, that was also another record at 54 million for a quarter's end. So historical highs on the backlog, but it's good to see it's not just the fact we're not shipping, it's also that our booking rates were far above normal as well.
Mm-hmm. No, we also, when we spoke last, you'd mentioned that you've got significant amounts of bids out or tenders. Give me a sense of that. Like, what's the size of the sort of the bids that you're bidding on right now in totality, and what's your sort of historical rate of success there?
Yeah, so typically, and I'll add a little bit more color to that as well. Typically, our sales funnel could be anywhere from 130 to 250 million, right? So that's the whole sales funnel of not only bids, but budgetary quotations that we've kind of sent out there. There's a smaller amount of that's a formal tender, and those are the ones we're more interested in. When you send a budget out, you're not aware whether the project's actually going to go ahead. There's a lot of tire kicking, feasibility studies. So you do tend to do a lot of that preliminary work to set you up for a future bid. But once a tender hits the street, depending what metrics we look at, whether it's the number of projects or the total dollars of projects, that can range from anywhere from a win rate of 35 to 52% in North America. much lower win rates in other countries and much higher win rates in specific geographic areas. But that gives you a rough idea of that win rate. The outstanding bid number fluctuates from week to week, but this is where it gets interesting and kind of ties back into those delays, those front-end delays we're talking about, right? It's just taking longer for these projects to be awarded. And currently we're hovering plus or minus a few million, right around the $75 million range. So it kind of gives you a bit of an idea. And historically, we would say that, within the next 12 months, we would expect to have some type of closure on those open opportunities, whether it's a win or a loss. So that's one of the other factors that looks promising for Biorem at this stage is, the record backlog, record bookings, but there's also a record number of outstanding bids that haven't been awarded yet. So even if you take the low end of our win rate on those, that's still a nice group of potential projects to come down. Anything can happen in the future, right? We're not guaranteed, but I look back at 14, 15 years of data, and we do well in North America. So I'm fairly positive that we'll get a substantial portion of that.
No, perfect. I want to remind everybody that's listening, as always, if you've got questions, and I see a number of questions that come in, but if you've got questions, please use the chat function, and I'll fire them over to Derek here. One question that is I can see there that I was going to ask is give us a sense of the competitive landscape. I mean, you touched on a little bit that there's there's different variations of competitors, but give us a broader idea of what that competitive landscape looks like.
So it's in one word, I'd say it's fragmented. There's various tiers of quality, let's say, from low end to possibly equivalent, and in all fairness, equivalent competitors. I look at competition from a geographic standpoint, and I look at it from an industry standpoint, and I also look at it from a technology standpoint. We discussed the fact that there's biological, physical, and chemical. Sometimes all three could be used for a job, right? They all have their pros and cons. Certain customers prefer one type of technology. So in certain cases, it's competition against various technologies. Actually, in a lot of cases, it is. And then once it hits the street in a tender, it's typically the owner and their consultant have decided on a technical approach, and then it becomes competition between the group of companies that provide those services. While a lot of companies tend to see themselves as global or regional, when I say regional as North American going after every job, they're really just competitive in certain areas and not as competitive in other areas, right? Where some of these systems can be quite large. So a cost component, a very significant cost component of these systems is transportation. So if, for instance, I'm going to be, exaggerate a little here, but if your home base is in Alaska and you're bidding a job in San Diego and you've got to ship it to San Diego, you're going to be at a great disadvantage compared to a guy that's in LA trying to ship there. And that actually has a big impact on the competitiveness of each of the competitors based on the job. So technology, geography, key factors when I look at it. But the simple answer is it's fragmented. There's dozens of guys out there. And depending what their capacity is, the shop depends what pricing margin they're willing to put on it. If they need to feed the guys in the shop, they'll be aggressive, go after that. When they're overfilled and can't get the product out the door, they tend to not be as competitive. So a lot of factors that play here.
Yeah. Now, Derek, whenever I hear the term fragmented, it always, my mind goes to M&A. What, if anything, are you guys doing on the M&A front? Are you looking at deals, or is it even something you're considering? What can you tell us there?
Absolutely. That's been an integral part of our growth strategy. One of the things with clean tech that continually surprises me, the adoption curve is slow. The sales cycle, delivery cycle is very long. So growth simply based on organic strategy is just going to take a long time. We have to do it, right? It's not only about growth, it's about maintaining your position. So you need those strategies. And it's been a big part of it. But the other big part of our growth strategy has been the M&A side. And that's one of the sides that we just haven't been as successful. We've looked at a large number of companies. We had a good handful of candidates that went quite far last year, but just didn't make it past the due diligence phase. There's a number of reasons for that. My team and I are very conservative. We're really interested in building a company that's going to stand the test of time. We're not that interested in financial engineering. So we're looking for deals that'll be accretive, where we add value, that add value to our organization. And once you start putting all those criteria in, there's not a lot of companies out there. I find capital equipment in the clean tech space is difficult. It's very lumpy. Most companies are just not reliably turning a profit. And when you start looking into it, the last thing I want to do for our shareholders is go out there, spend all the time and money, and it's the lost opportunity cost, which is just as important, and the loss of bandwidth, just to get a bolt on to find out we're pumping money into that to keep the doors open for the next few years. So still looking at companies, still keeping our eyes and ears open, still in discussions with a couple candidates, but we're not going to rush to do a deal for a deal's sake.
Mm-hmm.
And we're really looking for something that's going to add value.
Mm-hmm. Let's go back to something that I should have asked earlier. Back to the backlog. You had mentioned, and I think I've seen it in a couple either press releases, but there's a percentage of that backlog that you've got right now that you expect is going to get recognized here, I think over the next 3 quarters or something like that. But maybe explain what that looks like in terms of the current backlog and when you expect it to get recognized.
Yeah, so historically, I would say that whenever we report backlog numbers, you can expect it to revenue in a 12 to 18 month period. Given the magnitude of our backlog this time, there's a larger percentage that's going to ship out later. And the exact numbers, roughly 10 million, I'm thinking is in for 25, and I've got probably $1 million or $2 million in beyond 25. So we can reasonably expect, barring any issues, there's, I hate to think what could happen, but barring any issues, I would expect the majority of our backlog to ship this year. So 3/4 of it would be a reasonable number to anticipate. At the end of the day, there's still a lot of factors. It's it's funny that we seem to always get hit by unusual events, whether it's a tornado hitting a manufacturing site or a construction site. Last year, not only did we have tornadoes, we had another case with forest fires out of control that delayed us delivering a bunch of equipment, a significant amount of equiment. So there's all these things that can happen that we just can't control. But for the most part, historically, that's kind of the range we're looking at.
Perfect. Awesome. Why don't we jump on some of the questions that have come in, and then I can finish up with the last set of questions I've got here. So let's see what we got. Okay. So I've got Jeremy is asking, can Derek speak more about the addition of physical systems to his toolbox? What percentage of its pipeline is now with this technology, and how will it affect the growth of the company?
Those are great questions. I'm hoping very positively. Looking at the bulk was driven by the physical, the dry scrubber products. And when we look back over the last 18 to 24 months, the target market was really just Canada, and we had one state. And at last count, we were roughly 25 million in sales with those new products. I mean, if we look on average, we've been roughly the $25 million revenue company. So almost a year's worth of revenue has come just from these new products. And given the other statistic that we talked about, that roughly 1/3 of the market is these products. I would expect that as we continue to expand into other geographical territories, which we have been in January, and speaking to our distributors and our customers on these things, I expect that a larger and larger proportion of our sales funnel will be to these. That the exact numbers I don't know, but I do know that January has been if every month was like January, it would be amazing. We've had more than one bid a day go out the door, which
Wow.
is pretty significant. That's a robust bidding rate. And I would say out of those was maybe a third were dry scrubbers alone.
Mm.
So I expect it to continue to grow.
Mhm.
I always caution it's still a new product. It's being accepted. We still need to get it out, but there's a lot of competition. It's a commodity product. We're pushing our
Mhm.
way against entrenched incumbents in those areas.
Mhm.
But I'm very positive. Like I said, the reception has been great. Our partners are noticing and very interested in kind of moving this product. This is being expanded on a day-by-day basis. I'm cautiously optimistic this is going to be a big thing. And
Mhm.
furthermore, it's not only did we get the 25 million in that period, but it's one of the reasons that helped us deal with a few big challenges. It helped us hit the booking records last year.
Mhm.
Furthermore, we talked about all these delays, but I didn't get into the specifics. Biorem actually had roughly $16 million worth of contracts push out of 23 into 24. I mean, 16 million. Like in a
Mhm.
normal year, that would have been devastating for a company like ours, right?
Mhm.
Actually, not too long ago, that was a full year's annual revenue. So having these new products, being able to find, close, and deliver them in the same fiscal period, these initiatives really paid off and offset a very large part of that 16 million push. So it's not only the growth, but it's filling in the peaks and the valleys, right?
Mhm.
So it's been adding more value to the company than just simply adding to the top line.
Mhm.
So very excited. And then furthermore, the benefit as well is being able to be a one-stop solution, right? It's
Mhm.
great for the message. We're technology agnostic. We match
Mhm.
the right solution for that application. Having that product line helps us there. So
Mhm.
valuable
Yeah.
in more than one way.
Yeah. No, Dirk, you mentioned the dry scrubbers, that it's a competitive market. What is able to make you sort of sell the product if it's a commodity product? Is there something different? Are you able to package it up with other products? Is it cheaper? What can you tell us?
All of the above.
Okay,
That's the
good.
short answer, right? There's
Yeah.
no single answer to everything.
Mhm.
When we need to be competitive, we can compete and go at the lowest price. Um, but because it's a commodity, there's still room for improvement. And because it's been commoditized, the technology component has been diluted. And as we get deeper into this market, I see that not every system or adsorbent is created equal.
Mhm.
And I think that fact has been lost on the industry and a lot of the end users and the clients. And there's not a single solution for every application. You just don't put a bunch of
Mhm.
burnt coconut shells in a tank and hope it's going to work for everything. So it's getting back to the fundamentals, and the approach we're taking is science. Get back to first principles, guys. What's in your air? What are you trying to achieve? Let's build the right system to optimize for that. So using the same approach we took to biology, we're now applying to physics. Now, that won't translate into real meaningful growth for another 5+ years if we just look at the curves, but it's the message we're working on. It's the type of the peer-reviewed papers that we're writing to try to elevate the science, to kind of get rid of the bottom feeders and raise the margins there. So
Mhm.
focusing on the long-term game that way. The short-term game is get the orders, hit them hard, push out our competition with low prices. And then it's relationships, right? It's
Mhm.
still people buy from people. There's still an element out there where people are going to pay a little bit more to make sure they get the support and the responsiveness and the guarantee which they get with Biorem.
Yeah. And I mean, all these things that you're installing, is there sort of a life cycle, is there a replacement sort of opportunity here once these things get older, or do they last forever?
That's the other beauty part. We kind of alluded to that at the beginning, where there's a consumable aspect. That really depends on the application and how it's operated. We've got a project that shipped. It's not in operation yet, but if the design estimates are right, they could be going through that consumable every two to 4 weeks. That's at the extreme end of the short side. At the other end of the spectrum, you know, it's quite common for customers to expect 2 years out of that product. I think in reality, the average is closer to 1 year. But so you've got kind of got that range from, you know, several weeks to a 2-year period.
Okay, so back to some of the questions that came in. Russell says, Derek, what percentage of the millions and trillions which you spoke of do you feel you could capture over what period of time? Now, obviously, there's a subcomponent that you guys operate in, but give us a sense of kind of what percentage of that addressable market you think you can reasonably capture.
That's another excellent question, right? Because all these reports throw out these massive numbers for the market, and you know, through all our intelligence out there, we don't see the numbers being that large, right? From what we're seeing, and I don't think we're missing 90% of the market that's out there. So it's a very good question. You know, if I had to hazard a guess, I'm thinking 20 to 40% of the numbers that are typically reported in these studies are addressable. All right, especially as we expand the products that we can provide and the ancillary services. So I know it's a big range, but I think I'd feel comfortable in that 20 to 40% range.
Okay, perfect. We touched a fair bit about the pipeline, the sales opportunities you have here, but one of the questions that's come in here is, how do you actually sell there? Do you use resellers? Do you use any sort of consultants, or is it fully your team that's out there, you know, preparing the bids, dealing with people? What can you tell us?
So it's a bit of both. We have an internal professional sales team that is supported by engineers, and most of our sales guys are fairly technical as well. But the way we've structured the company, these guys can handle a large volume of work because they're supported. Each of them have access to multiple drafters, technicians, and engineers. So it's a very efficient system. But each of the sales managers has a team of distributors. And so if we look outside of the company, we probably have between 100 and 115 external professional salespeople that are working in their own territories, right? People still buy from people. So you have to be in that territory to have any access to information and access to the multiple stakeholders, right? You have government, you have regulatory agencies, you have contractors, you have operators, the end users, in certain cases, the financial teams. So you've got a wide range of stakeholders, and you just need to have people that are connected at each of those stages. So both internal and external, and it's internal, we're actually spread across the continent as well. External, spread in each territory that we operate in.
Gotcha. Okay, a question from Colm. It says, Derek mentioned ancillary products that could help with noise pollution. Are Biorem looking to develop these new products or looking to acquire them? And maybe let's talk a little bit about like sort of the R&D plan or strategy going forward. Sort of what areas are you looking at either spending or potentially buying to beef up your offering?
I think we could have a whole session on that alone. So I'll just kind of hit the high levels. You know, I look at R&D more as product development. In fact, I have removed the word R&D from the company. I think, you know, historically, we've had a lot of very smart, bright PhDs in our company that could build incredible widgets, but there was always a disconnect between what those widgets were and what the market needed. The approach I've taken is it's the market that dictates what we need to provide. You know,
Mm.
what's out in the market, what is it fulfilling, what areas are ripe for as opportunities for improvement, and can we add value in providing that service? So that's how we kind of fell into the whole sound attenuation or noise issue. As you can imagine, to move air, you need fans or blowers, and sometimes our systems move a large volume of air. You know, having a fan that's 250 horsepower is not unheard of. Furthermore, as we've probably talked about in other sessions, one of the driving factors for air emissions and odor control is urban encroachment on infrastructure. So, well, you put a house 10 meters from a fan, they're not going to be able to sleep at night. So it's just, you know, we're a bunch of bright engineers. We have to buy these sound attenuation devices. There's a number of things you can do. It gets fairly complex, but we're engineers. We can model sound. We can come up with a system to deal with that sound, and we can fabricate them. So that was just one of those things that we're looking at. So, and to me, rather than it being, you know, fundamental research, what it is really, you know, instead of that transformative thing, we're really looking at incremental improvements on products and technologies that either we provide or that are already available on the market and trying to do it. As we deal, you know, any air pollution control package, and this is, I think, what sets Biorem apart from most of our competition. A lot of our competition has one solution, tries to package it for everything. We pair, as I've said, we pair the right solution for the application. Well, the most fundamental aspect for whether you're going to be successful dealing with air emissions is understanding the airstream. And 80% of the time, you have to deal with the airstream first before you can deal with the odors or the air pollution. What I mean by that is pre-treatment. Do you need to heat it? Do you need to cool it? Do you need to remove condensables? Do you need to remove aerosols? Do you need to remove dust? There's all of these other things that you might have the best widget to deal with that odor, but if you haven't dealt with these other things, it's going to fail within a month. So you can imagine where that leads us now. There's all kinds of technologies that are complementary that fit this treatment train that just makes sense for us being at the engineers we are, to put together and provide as a full package.
Okay, another question's come in from Colin again. What percentage of revenue hits the backlog first, as opposed to service revenue, replacement parts, et cetera? Now, I'm not 100% sure the question, but maybe I'll frame a question that I wanted to ask along those lines. Like when you sort of announce a $55 million backlog that you have, is there other revenue that doesn't get accounted for there? Like, is there any almost off-the-shelf orders that would come in that don't necessarily show up, or is it all packaged up in there?
No. When we say backlog's backlog. One of the funny stories I have doing this M&A stuff is, you know how many candidates I've looked at that have pro forma backlog, and I'm trying to figure out what that means. And it's actually a sales funnel. It's not an order.
Right.
So when Biorem says backlog, we have a contract in hand. That could be service, it could be anything, right? It's whatever we have, a signed contract that we have to deliver a good or a service for. I will define that as being part of the backlog.
Awesome. Okay. Well, that answers my question. Perfect. What are the challenges you face? Obviously, you know, businesses face a myriad of challenges. You know, we've gone through a pandemic, we've gone through supply chain issues. You mentioned delays. What sort of keeps you up at night?
I mean, the short answer is everything. You know, I used to have hair when I started Biorem, and I don't anymore. But I tend to fret about things. But I've learned over the years that we always overcome the challenges. So the short answer is I stay up at night every night almost, and certainly when I'm on the porcelain throne, that's my other thinking spot. You know, there's ideas are always flowing in. I'm always worrying about things, but there's nothing out there that is an existential threat that's on the horizon. I continue to be, you guys can all do the math, right? You've read the financial statements, you've read the press releases, the MD&A. You can look at our historical delivery, and you can see that the stars are aligning, things are converging, that 24 could be a good year. I'm already thinking, I can't worry about the things I can't control, right? So I'm not going to worry about a forest fire again. I'm not going to worry about an increase in hostilities in the Middle East. What I can worry about is trying to make sure that 24 is not a one-time blip. So to be honest, my other part of the answer is, my biggest worry right now is repeating and exceeding 24 for 25 and 26. So I'm already thinking ahead of, what do I need to be doing? I'm looking, it's already February. I gotta keep on booking. So those are the things that keep me up. There's always competitors that are challenging, that cause us pain. But we've been doing this for a long time. We've outlived everybody else. We're gaining traction. I can't worry too much on that. A lot of the newer technologies continue to be fads that are not proven in technology, that we've verified that cannot do what they claim to be able to do. So for me, it's really about growth and stability. I want to see it. I expect some variations. We've done a good job smoothing them out. I just don't want to see 24 do a big blip. So I'm really focused on building out 25 and 26. We're in a nice position. We already have a nice little backlog for 25. So we've got 11 months to make sure that 25 is also stunning. So hopefully that answered your question.
That'll work. That'll work. Absolutely. Absolutely. Okay, so we've got a handful of questions left. We're going to rifle through these if we can. And for the sake of time, guys, the questions that we've got right now, we'll work with those. And then if you've got any follow-up questions that we missed, by all means, you can either reach out to me or you can reach out to Derek, and we'll make sure you get those questions answered. So Derek, real quick one, what's the end game here? Like, what happens with Biorem, say 5 years from now? What what's the end game?
Our end game is to become a full service provider. It's the engineering services, it's the equipment. I really truly want to build a Canadian global clean tech firm that stands the test of time. I've put in the better part of my life into this. I believe in what we're doing. I believe in the whole ecosystem, and I want to continue to build this out. I think we're doing good things for a lot of people. We're improving the lives of communities. I live, and a lot of my staff live next to our system. So, we believe in what we do, and I want to continue growing that. From a numbers perspective, which is, I imagine, is what maybe the question was alluding to, the sky's the limit. Our next milestone is 50 million and 5 million, right? 50 million top line, 5 million down at the bottom. And then once we achieve that, then go for the big 100. Want to keep on growing. We're going to continue to do organic growth as we continue to look for good candidates that I think will be a good part of the family. So kind of looking at that, we're flexible, we're open. Not only do we have the engineering side of things and very technical and focused on air pollution control, but the other part of us is we're business, we're entrepreneurs. We will look at every opportunity, we will examine every opportunity, and we do it from a very conservative standpoint. So, it's good to take risks. They got to be calculated, and so it's just keep on trucking, doing what we're doing.
Derek, who's your toughest competitor?
Once again, I can't answer that because it's regional, and it's technology, and it's industry segment. They can all be very difficult depending on the conditions. And unfortunately, the market is built in a way that in a lot of cases, you don't get rewarded for quality and longevity, and it's really just price. So that's the toughest part of dealing with the competition, because a lot of times I see less than reputable firms being elevated to the same size or same level as Biorem, and you know, I'd rather see top tier guys go head to head rather than everyone just fighting for scraps. So it's a complex question. Everyone can be a formidable opponent. We have some good guys out there. We've got bad guys out there. It's really a job by job thing.
Yeah, no, fair enough. Okay, so you mentioned some of the issues around pricing and the increase in costs associated with some of these projects. How do you protect yourselves against sort of the escalation prices?
So that's I'll kind of be very indirect in how I answer this. I mean, it's one of the things that I think has made us so competitive, and so I don't want to give away the tools in our war chest, and there's a number of things. Just to put it in context, though, the vast majority of our contracts have no price escalation clauses. So for the last several years through COVID and the inflationary pressure, just if you want, go back, take a look at how we've performed on a margin standpoint, and you'll see just, I think, how well the organization, we haven't really spoken about that a lot, but it's a day-by-day challenge with a vast number of tools to try to maintain our profit without going back to the customer for a change order. It's been a challenge. The good news is, as there's been a lot of industry outcry against this, right? It's pretty difficult to force these types of cost increases on vendors. So new tenders of certain sizes and structures, how they get executed, some of them may be linked to construction indices or other types of indices. There's other mechanisms I'm seeing worked in, but the vast majority have not had that. But we've had a number of strategies that have worked out really well. But I'll tell you, it is literally a new challenge every single day. And I'm really proud of the team for being able to work through that, be creative, and quite honestly, to work with our customers as well. So there's got to be a little give and take, even when you're not talking about adjusting price. There's got to be some give and take as we get creative with solutions. And so really proud of how the whole ecosystem has worked, both my guys as well as our partners, to make this happen.
So Derek, I mean, you know, what we're seeing from our side is you've sort of come out of this bit of a trough of, let's say, slowdown or delays in business. You had a profitable quarter this last quarter, and it really looks like your next 12 months should be, you know, quite strong for your business. What's like it seems like you've got kind of almost everything going in your direction right now. What are we missing? Is there anything that we've sort of should have a better, clear understanding, or what's the key message you want to make sure everybody kind of walks away with today around the business?
Yeah, I think the key message, we've covered it, right? When you look at Biorem, look at the convergence of factors, which all seem positive. Understand that there's still risks. There's the risk that we don't know about and those unforeseen. I wouldn't quite characterize this as being out of the trough just yet. I don't see any changes in the market behavior, positively or negatively, to say we're out of troughs. I will expect to see delays as we move forward, and we'll try to navigate those. The magnitude of those delays, I won't know till they happen. So, you know, I think that's the thing. There's always risk, but when you look historically and you look at the factors and how they convert, things do look rather positive for us right now. I think those are really the key messages. The other thing I say, and it, you know, it's putting more pressure on me and my team, but you know, hold us accountable. It's you know, as you and I have gotten to know each other over the years here, you know, I don't promise the moon and not deliver it. I also don't say something that is too easy to achieve. What Doug and I and my team try to do is we examine all the factors. We try to give you the facts. We try to put realistic goals in place, and we try to achieve them. And I think that's what you should do, is hold us accountable for those things we said we would do, and did we actually do them?
Fantastic. We will keep you accountable, and we certainly will follow you very closely. Derek, thank you for joining us. We've been speaking with Derek Webb, CEO of Biorem Incorporated, symbol BRM on the Venture Exchange and BIRMF on the OTC. Derek, always great to catch up and really appreciate the time today.
My pleasure. Anytime.